Looks like we're started. Let's let everyone join in and we will get rolling in a moment. Markets, look at another screen here. Markets very fickle, up a bit, down a bit, left a bit, right a bit. Is it JP? Is it Trump? Who knows what's going on? Is it world events? It's a very headline driven market at the moment. Even more reason to be super disciplined. Let's let a few people join in and get the ball rolling, and we'll get started straight away. Got an hour with you, ladies and gents, today. Thank you so much for joining me. Hopefully, you can all see my screen and hear me loud and clear. It's been a while since we've done these. It's sometimes you're dusting off the technology, but I think we're good to go. So we'll get started. Listen, some housekeeping, if I may. I'm just looking at my other screen here. So we've got a series of webinars. I will introduce myself in a moment. But just kind of why you're here. Listen, you're here because you're serious about your trading. You're here because I hope this topic has piqued your interest. You're like, hey, do you know what? If I really dialed in my discipline, I would probably unlock another level to my trading. That might be the one thing that's holding you back, because it is for many traders, right? It's one of those things that is a nemesis for so many. So with the webinars now, Pepperstone and I have kind of joined forces again. We did these last year. If you're new here, you're very welcome. If you're an old hand and you revisit and you visit these before, then you're welcome back. So this month we're going to talk about the mental edge. So mastering discipline, building confidence, trading with control. Today specifically, discipline mistakes that kill your confidence. And my objective with these webinars is to really help you find one or two nuggets that you can take with your trade, take away for your trading. I don't pretend that everything is going to be amazing and to go, oh, wow, it's all just epiphanies and amazing stuff. But often the way mindset is everything in trading, right? I know it's a cliche, and I don't want to labor that point. That's why you're here. You recognize and understand the importance of mindset. But if you can take one or two nuggets, or a few even better nuggets away that help you look at your trading through a different lens, just something clicks in your mind, the way that you think, the way that you shift your perception of your trading, your results, your performance, the market. Sometimes that's enough to unlock and start the momentum going. So a few changes to the webinars. If you were here before, they'll be recorded. You will get a copy of the recording, but you have to register. They will no longer be available on YouTube. They are going to be exclusive for those traders who have registered and have signed up via Zoom. So if you join live, you get opportunity to get interactive with the Q&A. Always have time at the end where I'll do my very best to answer your questions. If I can't, I will definitely guide you to someone or somewhere that can give you the answer. But most of the time, I can probably help you out with that. So that's a good benefit of coming live on the webinar. And plus, I think that if you come, you pay a bit more attention, right? We've all been on webinars. You've got them kind of sit on one screen. You're at the market doing that. You're half listening, and you never know. You never know when something might be like, do you know what? That's interesting. So recordings will be sent out to everybody. Changes to the way that the recordings are sent out, no more YouTube. Okay, so let's get straight into it. Today we're talking about 7 discipline mistakes. There's some more, and there's some stuff at the end. And at the end, I'm going to share with you a really kind of tactical way of resetting your confidence, helping improve your discipline. I'm going to go through some of the stuff that I think is the most important for traders. A great quote by Jesse Livermore. I hope everyone has read Reminiscences of a Stock Operator. Absolutely amazing book. Classic, 1932, I want to say. The market does not beat them. They beat themselves, because though they have brains, they cannot sit tight. Of course, Jesse Livermore was referring to sitting on your hands and not doing anything excessive with your trading, over trading, all that kind of stuff. But just it matters intraday. It matters on a swing term basis. It matters on a multi-time frame basis. It's just being disciplined and being able to do what you say you're going to do. Okay, so before we get started, I have to just run through a quick disclaimer. You guys can see my screen. I'm assuming you can see my screen. Let me just double check here. Yes, of course you can. Okay, good. It's because I've got an unusually large recording of myself there, which is slightly unnerving, but maybe Zoom upgrades now and then, and hey, it does what it does. Listen, just a reminder, guys, that spread betting CFDs are dangerous if you don't treat them with respect. When you're using leverage, when you're trading with margin, things can get nasty very, very quickly. Just understand that that's the game that we're playing. Of course, when things go well, it's great. You can leverage up and you can kind of make a lot of money very, very quickly, but it also has the opposite effect. Things can get nasty very, very quickly. And I'd say, especially in this current environment where it's headline driven, you've got to understand the risks of the game, got to understand the risks of what we're doing here, because over leveraged, no appreciation for risk, especially the headline tail risk at the moment, anytime in the market, to be fair, but especially at the moment, just understand that that it is a risky business. This recognize how it works, understand the risk management stuff, and hopefully you're experienced enough to appreciate this and know this already. If you're brand new to trading, just double check that it's exactly what you want to do, and you completely are comfortable, and you're not doing something going in with your eyes closed. Because I hate to hear that. I hate to hear newer traders, developing traders, losing money from a strategy that's just kind of not working out, or you're trying to develop things, that's fine. But losing money because you didn't check the headlines, or you didn't really understand what happens when you get slippage, all this type of stuff, it can be avoided. So be smart. And once you're happy with that, let's get rolling. Okay, so just a reminder, my name's Mark Holstead, by the way. Pleasure to meet you if I haven't met you before. I've got a lot of experience in the market, started trading in 2001, but I'm not here to tell you I have all the answers. Absolutely not. Yes, I've traded through different market environments. Yes, we've seen all sorts of stuff. I just missed the dot-com boom, actually. But apart from that, I've traded through flash crashes, all presidential election, all you name it, right? There's a list of all. But not here to say, hey, you must do this, and I know best, because I certainly don't. But I also am in a unique position because I run a community called Traders Mastermind, and through there I see a lot of developing traders. So I see a lot of traders who are struggling, and then they kind of turn the corner. I get to observe the course corrections they made, the thinking shifts, and I kind of see a bigger picture and perspective from someone who's kind of gone through the journey, but also from seeing others. So I'm quite well placed to share with you not just what I think is effective from my experience, which is good from to a certain degree, but also to see others, different personality types, different traders, different markets, how they have thought about trading, how they have made shifts in the way they think, the way they act, the strategy, etc. And that's my plan really over the next few webinars, this series, and then the next month with a slightly different topic, and the next month slightly different topic. All designed to really help you kind of move forward, take things up a gear. So today I'll share with you key ideas and thoughts, observations from others. Like I say, always please do your analysis, research, and homework. Not because I'm here to say that I'm going to be wrong. I could well be wrong, and it could well be something that's not very interesting to you, but also you get more efficacy when it's something you deploy after you've kind of got that kernel, that idea, that seed. You've gone away, explored it, added it to your plan, adjusted, adapted. You feel like you own it much more. You're going to be committed. You're going to stick to the change. You're going to stick to the regime, whatever that may be. And you feel more pot committed, if you like, more engaged. You have more ownership over the adjustment, whether you're adjusting a small tweak in a strategy, whether you're implementing some of the discipline techniques we're going to talk about and drills we're going to talk about in a moment, whether it's whatever it might be. So if you do see something and hear something today you quite like, take it, note it down, and then go away and expand on it to suit you, because we're all very, very different personalities, different trader types. Maybe you trade currencies, maybe you trade indices, maybe a scalper, whatever it is, right? It almost doesn't matter, but you need to adjust and adapt it to suit you. That's always the key in trading. If you read the Market Wizard books, you'll know that there's a massive variation of traders. Some are complete contrarians, some are trading momentum, some are scalping, some are doing this, doing that, the other. And it's finding out what works for you. And that's the same when we even niche down into something like discipline, is saying, hey, I need to find what works for me. Okay, let's get straight into it, guys. The confidence discipline connection. I say this a lot, and I don't make any apologies for repeating it again. Listen, confidence isn't just about winning trades. It helps. Don't get me wrong. You've probably had a winning streak and you felt pretty good about your trading. You got a bit of a swagger. You're like, hey, you know what? I'm doing all right with trading. Yeah. And it helps. I'm not going to say it doesn't. But really solid foundational confidence is built on disciplined execution, right? Disciplined execution. It is, just checking this here. Yeah, it is about making sure that you stick to your plan and building in the confidence bank. More on that in a moment, how to kind of hack that. But you think about the cycle that we can get into if we're not careful. Small discipline lapses, then you hesitate the next time you take a trade, and you have a bit of doubt whether the trade is effective. Is my strategy even working? Is this going to lose? You start to second guess everything, and you start to really go against all the mantras and quotes and north stars that are effective in trading, i.e., every trade has a random outcome. You don't know if the next one's a loser, but your expectation is that over time that edge will play out and generate profit. That's why you develop that strategy. And so you start to second guess that. Is the next one going to be a loser? Should I do this? Should I do that? You overthink stuff. Should I wait a little bit longer? Should I pull the trigger here? And it just never serves you, right? And so, having a really deep rooted core strength in discipline helps you build confidence. It helps you, that snowball effect of it starts just small. It starts to build, it starts to get better and better. You reduce the overthinking, and it works in other ways around as well. So we want to make sure that we're trying to build confidence. Yeah, one of the things, great, of course, profitability is great, but it's not something we can necessarily control. The best traders in the world suffer from drawdown, suffer from stagnation. And if our self-worth is attached to our equity curve, it's a very, very difficult journey. You want to decouple yourself from that and say, hey, my self-worth as a trader is built on how I operate and how I stick to the process. And question here of have you ever second guessed the setup? I don't even know why I put this in, because almost every trader, if you've been trading for more than a few months, is going to say yes. And listen, I'm also not here to say let's trade like a robot, guys, because if you want to trade like a robot, go and build an algo, go and hire a developer, pay a developer, have a systematic approach and do that. And there's nothing wrong with doing that. But you're here because you're a human trader, probably, maybe some bots here, I don't know. You're a human trader and you want to have that element of rule-based approach to kind of guide you and keep you on the straight and narrow, some filters, some triggers, but maybe you add an element of human discretion in there as well, because like me, if you believe that that's where the edge is as a human trader, you need a little bit of discretion, not too much, a little bit. Anyway, I'm going off piste. Let's stay back on track. Let's start off with some of the biggest challenges I think that traders have. And some of these, obviously, you're going to go, yeah, I've heard of these before, Mark. Great, rah, rah, rah. But the idea here is to really bring the shine a light on them. Yeah, to shine a light on them and say, hey, what's the fix? We'll do this, discuss the fix or the potential fix in some more detail. And maybe you go, one or two of these, you go, yeah, you know what, that's me. That's a real ticking time bomb. One of the things I sometimes notice traders, I call them uh landmine traders, right? You're walking through a field of landmines and you might get away with it. You might get away with it, get away with it, get away with it, but you know that at some point you're going to step on a landmine and the account's going to go. And discipline, helps avoid that. And maybe it's over trading, maybe it's not sticking to stocks, maybe it's all these things that we're going to cover. So just be aware that even if you've had a good run, deep down, you know what, man, I'm dicing with death here, and I really have to manage risk in my account. And by the way, just as a side note, if your strategy relies on you running through a field of landmines and not getting hit, just know that's not gonna. It's never gonna work out. I mean, you know that deep down. So you need to develop a strategy. So if you're adding to trades, if you're doing stuff that's really poorly disciplined, and that's kind of got you where you are, you know that at some point that's not going to work. Anyway, overtrading. This is the big nemesis for very many traders, a silent confidence killer. We've all been there. You might have been trading 20 plus years like me. And listen, we're humans. From time to time, we're going to take trades that are outside of the remit. And I hate to tell you this, it's okay to make some mistakes. It's okay not to be perfect, but you just want to make sure that you do the most things right and you have the ability to be really dialed in when you need. I was watching a trading interview, or an interview, should I say, with hedge fund manager. Oh, which one was it now? Should remember. Anyway, prominent hedge fund manager, and he was saying, listen, sometimes I go in too early to trade. Sometimes I don't trade with conviction. All the stuff that we do as retail traders. So it never goes away. Even if you're at the top of your game, you're a human being. So give yourself a little bit of flexibility there. And okay, listen, more trades, more chances to make mistakes and reinforce bad habits. Now, this is something that might not be thought of, is that, hey, over trading is, we know it's bad. We know that, and I guess this, I'm going to guess this. If you're here, if you reduced your amount of poor trades by 50%, your equity curve would be in a very different position. And it might be the one thing that you focus on now for the next multiple weeks and you get nipped in the bud. Overtrading is the big one and it kills confidence. Why? Because you reinforce the bad habits every time you take a trade that's all right. I jump on this momentum. Oh, I think cable's going higher. Oh, I think gold's going to, I think. Market doesn't care about that. It's not a part of your process. It's not a strategy. All you do is reinforce bad habits, especially if that guessed trade or the trade that you guessed works out because you're, oh, yeah, actually, you know what, maybe I'm pretty good. So you need to be very, very mindful of this. And also, we might not label it as FOMO, but it is. If you're honest, it is. Because that's why you take a trade that's outside of the remit, outside of the plan, outside of the process is, oh, I think that's going higher. I don't want to miss it, as opposed to reframing it in, hey, is this part of my process? If I do this, I'm going to slowly erode my confidence, which is the correct way of thinking. And so a fixed idea is to have a pre-trade pause. And it can be 10 seconds, especially for day traders and even swing traders, right? Just go, just calm, just take a breath. Just say, hey, is this part of my setup? I'm buying flags, I'm buying dips on a flag, I'm buying a Wyckoff type spring after a flag formation, whatever it is, right? Is this the setup? No. Then why am I doing this? Why am I doing this? I'm doing this because I hope. I'm doing this because I fear that I'm going to miss this trade and it's the best trade ever. I'm not going to be on it. All those other things are going through your mind. But in actual fact, all you do is you just erode the confidence. And the more trades you do, the more you reinforce the bad habits. And it's tough. I know it's tough. But if you could just take a breath and get into the habit of trader I knew, and something I adapted probably 15 years ago or so, was 3 times like the Candyman. Where's the risk? Where's the risk? Where's the risk? Candyman, 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 right? Where's the risk? Where's the risk? Where's the risk? Now, that might not be enough. You might want more than that. But the point is this, is that that helps you look, observe, and remind yourself, where's the stop need to be positioned to negate the thesis of this trade? Where's the real risk? Have I got headline risk? Can I get pinged out on noise? If I have my stop tight because I want it to be tight, we all want a tight stop and we all want massive size, right? Tight stop, massive size. That's great because if it works out, you're going to make loads of money very quickly. So we all can fall into that trap. But asking yourself the question, where's the risk? Where's the risk? Where's the risk? Helps you step back, reassess, and look at it and go, you know what? I need to wait to that bid to crumble a little bit more. And that market needs to come to me before I buy that dip. And I can't really buy it here because if I put a stop there, this trade structure is not going to be worthwhile. The risk reward ratio is going to be skewed. I don't think you start to think of it a little bit more clearly. So something to consider here is to say, hey, have a pre-trade pause. Just take a breath. And no, I appreciate, guys. I promise you, I appreciate that it's easier said than done. But if you can make it a process, and we'll go through stuff at the end of how to help you do this, it will just help stop some of the bigger things. And I want you to stop and think for a moment. Okay, what's that one big thing that if you fix would just change your trading? There's normally one thing. And if it's discipline, you can go a little bit deeper and go, well, it is over trading. It is doing this. It is doing that. And so your job is to do nothing else, not try and be fancy, not try and add to trades, not try and resize, not try and take another strategy. It's just focus on fixing that because you know that one fix is like a big domino that's going to knock over everything else. And so it's worth kind of really thinking and brainstorming ways to get over things like this. Okay, so number 2 here is ignoring risk rules. So this is good from a stop perspective. Like hopefully you're away from this behavior now, but we always it's kind of write a passage, right? Moving the stop, not trading with a stop, all those really things that we shouldn't be doing. Or it's ignoring risk rules on a day basis. If you're a day trader, maybe you allocate whatever risk you have in the day, whatever risk you have in the week, and you breach it and you carry on trading, right? That is just so damaging. I can't tell you how damaging that is because you just open the door for just sloppy trading. And you didn't go into trading to be sloppy. You know you've got to be dialed in. You know you've got to be on point. And so the risk rules are there for a reason. I'll move it a little bit. I'll just have a little bit more risk on the day, or I'll just move the stop on this trade a little bit. it just erodes trust in your process. You're like, oh, why the hell do I even bother writing my risk rules down if in the heat of the moment when I'm under pressure, I completely crumble? It's so important to think of that. And, obviously the sunk cost fallacy comes into play here. This is a separate topic, but I wanted to touch on this. Holding on to losers up the day. You don't want to give up the day. It's very same as a trade, right? And maybe you've kind of evolved from letting trades run and on and hurting you. If you haven't, then that needs to be fixed. But maybe you're still a trader who does a lot of damage in the day or the week or the month, more damage than you'd actually allocated in your risk management plan. That's the sunk cost fallacy. Like, I don't want to quit the day because I want to make it back. I don't want to lock in that pain. And let me tell you this, this. If you lock in that loss in the day, it will sting. You'll be like, I want to carry on trading with every fiber in my body. I don't want to be locked out, and it'll hurt. You'll want to trade. You'll see something. I would have got that. Would have made it all back. And we've all had this story, right? And it's all BS. Because really, you need to be a man about it, or woman, right? Stand up and say, you know what? I've hit my loss limit for the day. I am done. The loss limit is there for a reason. As tough as it is, I need to walk away, live to fight another day. The conditions are not right. I'm out of sync, whether it's an emotional thing, my mind's elsewhere, whether I'm tired, whether I'm just taking rubbish trades. It doesn't matter. You need to walk away. So set your stop or risk for the day and don't adjust it, and just make that a thing. Again, it's simplistic, I know, but if you, again, all these things, you focus on the one thing that's important to you. And if you're always overruling your risk rules or overriding your risk rules, then it's something you need to address. If you want to take this another step and you want to take things up a station, up a notch, you have to face it and go, that's not really acceptable. If I take this to the next level, I can't be breaking rules like this, because if I'm 10x my size, that's going to sting. It's already stinging now, but where I'm headed, I want to be trading more size. I need to be able to tap myself on the shoulder, step away from the screen and go, hey, you know what? I'm done for the day. And not to state the obvious, but sometimes we need it. Was yesterday. This thing, it was yesterday on cable. If you bought that breakout, which is not an unreasonable thing, it's not not a big breakout trader myself, but people are. If you didn't have a stop on that, you let it run for the day, and you were constantly trying to buy that, buy that, buy that, buy that. It was a 50 pip remove. And today we had a face ripping short rally, right? But if you were more structured and said, hey, listen, I'll take the trade and I'll come out of 15 pip stop, whatever it is. So what? It's not a big deal. You don't do the damage. So just being smart about how you allocate risk capital. Okay, mistake number 3, chasing trades, that illusion of opportunity. And listen, you've got to be frank with yourself. Look yourself in the mirror and say, I'm chasing stuff because it's impulsive. I see the market rip off. I want a slice of that pie. If I can just jump on and get 10 pips, 10 ticks, $10, whatever it is you're trading, oh, that'd be very nice. It'd be a good start to the day. And it's an impulsive reaction. It's not part of your strategy. Now, listen, if you've got a strategy where you trade momentum and you're reading tape and you're watching for a tape pause, fine, go ahead. That's planned out. You know what your risk is. That's different. But if you're chasing stuff out of impulse and that's something that's common to you, again, it should be nipped in the bud, and reckless entry is just not going to help. So here's something to consider, right? And this is an important one. This is a really important one, and this will help you. Have a trading journal that's a missed trade journal. Now, I'm not going to go into kind of what you should do in journals, as we've covered that separately, and I don't want to kind of burden you with all sorts of, you must do this and do that and do the other. But as a suggestion, have a separate pad where you document the trade that you didn't take. So let's say you saw it and you say, I thought that was going higher. Wasn't part of my setup. It's not part of my thesis, not part of my plan, but I thought it was going higher. Here's where I would have bought. You write down your entry. Here's where I would have put my stop, and I think there's my target. And you start to do this over time. Now, here's what happens. You either look back at the missed trades book and you say, do you know what? I'm no good at that. If I look at the last 20 trades I wrote in that, none of them, a couple of them were, a couple of them didn't. It's not effective. Or you go, okay, that shows some promise. There's something there that I spot I need to monetize. And so then you develop a strategy from that and you say, what are these things? Actually, it's momentum, alert, 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 alert. And you look and you reverse engineer a strategy. Either way, you get valuable data. So rather than sitting there going, oh God, I've got to not take the trade. I can't be impulsive about it. And it's hurting me. I feel like I'm missing out on edge. I feel like I've got to read on the market there and I'm not allowed to do it because my rules are shackling me. You go, no, okay, fine. start to jot down those missed trades that aren't in your setup or aren't in your plan, aren't in your process, and just see if you're any good. You might find you're absolutely rubbish at it, in which case you go, oh, what? I've got data. I've looked at this. I'm going to keep them, just jotting them down, just be for a laugh. I'm not going to take them, but I realize actually if I'd taken them, I'd be down big. So I'm not going to take them. Or, like I say, you find something that shows promise and you reverse engineer and you build another strategy that you can fold in to existing methodology in your process and go, hey, this is the momentum chase trade. I don't know what to call it, chase trade, but you get the point. Here's my risk management. Here's how I filter it. Here's how I trigger. You make it more formalized so that that then is value. So you can see the difference there, and there's just upside. There's just upside from doing it, just something to consider. Yeah, and again, I think I use like a obvious example here. You know, yesterday the Dow kind of fell through the floor. This was at the opening bell, if I remember rightly. YM was completely, or Dow was completely out of sync with everything else. Just a complete sell-off, huge sell-off. If you FOMO'd into that, you know, the worst possible case, you're down 142 points if you got it bad. And no one's going to be doing that. No one wants to be doing that. Whereas if you'd structured it, waited for a tail, waited for a low high, whatever the hell you waited for, much more considered trade. But maybe there is something for jumping on momentum, right? But you don't do it, you document it and say, jumped on momentum, why, etc. Okay, so number 4, revenge trading. Revenge trading, fighting to get even. And you might see that, you might realize that actually it's not as easy and as simple as you think. You might be like, listen, Mark, I don't revenge trade, pal. I don't need to be listening to this. I'm not a revenge trader. I think it oversimplifies the meaning of revenge trading. I think we've all got it in us that we all want that equity curve to be at highs. It dissipates over time with experience. You're like, fine, I've recovered from every single drawdown I have until now. It's no big deal. But really, you know, we're ambitious, we're driven. We want that equity curve to be at the highs and more and more. And so it really digs into our hearts when we we're not at highs or we've given stuff back. And yeah, you can probably stomach a few, you can probably stomach a bit of drawdown, but at some point it gets frustrating, right? And actually, from an intraday perspective too, how many times have you taken a trade? Let's say you're trying to force a break, you buy the break, stops you out, buy the break, stops you out, buy the break, stops you out. This is another topic completely, by the way. I think you should only have a few bullets, but at that point you're pot committed and you want to get back that money that you, and then it breaks and it runs and you chase it and it stops you out, and it's just a, you know, it's just a real screwball job. So just be mindful that, you know, getting it back, whatever time frame we're looking at, intraday, larger equity curve, it just never serves you. You get frustration. You start to have that impulsive action. You get a bigger loss, more frustration. You can never win this. You can never win this, because even if you do get the money back and you do get your account back to equity curve highs because you took an impulsive action, I dare I say it's the worst thing that can happen, because it reinforces the behavior of, you know what, I need to stick to my rules. Look, I made all that money back, one trade. You know, I'm all right. And it just reinforces that bad behavior. You could never win. If you're in a spiral of frustration and take an impulse, you need to be able to withdraw yourself from the situation, reflect, step away, walk away, set a max loss for the day, for the week, for the month, whatever it is, and just stop trading. And just honestly, listen, guys, sometimes bathing in the pain is the right thing to do. As horrible as it sounds, and maybe I could have been a little bit more eloquent with that and sugarcoated it, but there's a real world, right? Sometimes sitting there going, I've traded like rubbish. It stings. It hurts. I don't like the fact I'm down from equity curve highs. I've made some mistakes. And just baking in that and not taking any impulsive actions is often the right, if not often, it always is the right thing to do. Sitting there, taking that pain and going, it's done now. It's done. I'm not going to do anything to make it worse. I'm not going to punt away. I'm not going to take a Hail Mary trade. I'm not going to try and fight my way back. I'm going to accept the fact the damage is done and it stings and it hurts. And I don't want to be in this position. And the chimp is screaming at you to say, this is hurting me. Get out of this position now. All you got to do is take a trade 10 times the size, one trade with back to curve highs. You'll feel really good about yourself, because you will temporarily, right? But it's baking in that pain and going, hey, This is the separator right now. How I respond right now is the difference between the 75.9% and the rest. And being able to sit there in that pain and going, yes, it hurts. Yes, I don't want my equity curve to be back at highs more than anything right now. I wish I could undo that bad trade, but I can't. I just need to stick to my process. My process is this. We'll talk about how to recover from a confidence perspective in a moment. Okay. So number 5, breaking your own rules and the self-doubt it creates. Honestly, guys, every time you break a rule, you just chip away at the self-trust. You don't believe anything you say anymore. You're like, and it gets to a point where, if you don't do what you say you're going to do, especially in the trading world, you kind of, there's no point in even having the rules because you kind of make the rules and you go, I'm all fired up on a weekend. I've got my rules, I've written it, and then by Monday lunchtime, I've broken a rule. And you start to then not believe anything you say. You don't have the self-trust. Um, and you're, and also you start to think, do you know what? I'm quite weak because whenever I'm under pressure, i.e., I have drawn down, I've taken a couple of losing trades and I should quit for the day. The first trade at the opening bell was a loser and has made my max loss limit. And that's frustrating because you're all prepared. You've got your levels, you're all G'd up. You take the trade, wipes you out. I should be done for the day. It's pressure. It is pressure, right? And if you can stick to the rules then, and do what you say you're going to do, you start to reinforce that confidence. You start to build the confidence, right? Rather than weakening it. So just be accountable. Just, hey, am I following my rules? Am I doing what I say I'm going to do? On a per trade basis or on a daily basis or whatever it might be, and just double check in. You're never going to do this all the time, but if you can just get into the habit of this, and this isn't what I said I was going to do, man. And I know I want to do this badly. I want to carry on trading. I want to ignore that risk rule. I want to take this trade, but I said I wasn't going to. And that's the most important thing for me because I recognize if I build that confidence and self trust, that's going to be have a way bigger payoff than any one trade I can do that breaks the rule. And maybe you make a few £1,000, a few £100, £50, whatever it is. Maybe you do feel good about that one trade, but the damage it does is just so difficult to recover from. And here's a question for you. Why bother writing down trading rules if you're just going to break them under pressure? It's valid, right? And sometimes you've got to be honest with yourself and look in the mirror and go, I'm breaking the rules, man. And what's the point in me writing all these rules down and trying to be this and da da da? And I'm not saying shackle yourself so much with the rules. That's a separate topic. You can overburden yourself with this rule, that rule, da da da. You've got 50 damn rules on. You can't keep with that. Risk rules are just non-negotiable. How much you're prepared to risk on the day, the week, the month, the trade, whatever it is. That's it. Everything else, fine. They're about becoming better and not chasing trades and stuff. But if you can just start with that, it's a good place to be. And there's the old devil and angel on the shoulder. Break the rule, break the rule. No, take the trade. Anyway, mistake number 6. Simple one, easy one. Just not reviewing your trades. I'm not here to say you got to start as a massive journal. If you're a really big, if you're a fan of journaling and gathering data, good for you. You carry on. But I know not everybody is, and so I'm not here to preach and say you must do this and you must gather every single scrap of information. That's just not what some of us do, and that's okay. You find out what's good for you, but I think you'll find value from reviewing everything, right? Just a little review point, 3 quick questions at the end of the trade, just a simple post trade reflection. Don't have to be in big detail. You have to write the damn thing down if you don't want to. Just simple, quick questions. Did I stick to my plan? Yes or no? If yes, great. That's good. If not, why didn't I? What was it? And this is the question that helps get you the answer that helps you move to the next level. Why did you not stick to it? Was I frustrated? Was I stuck into the momentum? Was I whatever what it was, right? So think about that. What could be improved? Could I have done anything better? Could I be a little bit better, be more patient, wait for the right trigger, wait for the bar to close? I said it was going to. I jumped the gun a little bit there. From a tactical perspective, should I wait for a pullback there? What part of the process needs refining? Doesn't mean you make always constant adjustments to your plan. I think that's foolish, personally. But you start to note down, hey, you know what? Maybe my execution could be improved. Maybe I could just be a little bit sharper with the way I pull the trigger here. And then give yourself a pat on the back. What did you do well? And this helps reinforce those good habits. I took the trade. It immediately went against me. I took my stop like a big boy, took my medicine, walked away. No problem. It was part of my plan. I did exactly what I said I was going to do. It was a losing trade. No big deal. Next. We go again. We go again. And it's just reinforcing those good habits. And by the way, you make the questions yourself, what you want to ask yourself. You don't have to be these, but I would suggest that you just make three very simple ones and just review, quick review, quick review, quick review. And I appreciate if you're a scalper, not so easy to do, but maybe consider in sequences, right? Scalpers, you're trading sequences. The market might be pushing to lows and you're kind of working a bid off those little dips, maybe selling into highs, trying to run one. You're working around a sequence. Always do the review after the sequence. You don't have to do it after every trade. Excuse me. Okay, so mistake number 7, trading without a clear reset process. Okay, if you've got a dip in confidence, right, often that causes a cascade and it just gets worse and worse. And I think this is so valuable. You clear, reset process, recalibrate, right? Because we've all been in a situation where you've taken a trade, it's outside of your remit, you've broken a rule, done some damage to your account, you've tried to get it back, you've got frustrated, you've got angry, and it just gets worse and worse and worse. And then you start thinking, am I even capable of doing this? You start thinking those real kind of, bad thoughts, and it gets worse and worse and worse. So, something to consider is, hey, how about building yourself a structured recovery process after you've had a rough patch? Something that you always do to get yourself back on point. And I'm going to suggest you just do something now, but you can come up with your own. But just something when you're feeling down about stuff, when trading's not going your way, when you're frustrated, when you're angry, when you're sad, when you have all these emotions that we do as a trader. This is trading, guys. This is tricky. You fall back on something, you go, okay, I'm not feeling great about things. Let me just steady the ship. Let me just recalibrate. Let me just adjust. Let me don't do more damage. And so something you can consider is something like a 20 trade challenge. It can be 5 trades. It can be 5 days. It can be something, but just something where you're rebuilding your discipline with a controlled process. So excuse the slide here. I've kind of rammed everything on to this, but you get the idea. It's not the prettiest slide, but it's effective. So an idea is and let's say you're a day trader, right? This is probably more apt for a day trader. It's like a week perhaps worth of trading. You redefine your rules. So the weekend you go, hey, I need my reset. My reset is I've got clear rules. And by the way, at this point, if you're a trader who acts with discretion, you need to remove that for this point in time because the objective here is to rebuild confidence and discipline in the process. It's not to make money. It's not to have great trades. It's just to steady the ship, just to calm things down and stop that spiral of confidence, confidence death spiral, if you like. So set your clear rules, define your entry, your stop loss, your target, risk per trade. Bread and butter stuff, trading 101, simple things. And we're not trying to be, an amazing trader this 20 trade challenge. We're trying to just say, hey, I buy under a dip of lows. I put a stop loss 1 ATR. My target is the VWAP, and my risk per trade is £500, £50, five, whatever it is, right? It doesn't matter. Simple. Just a few defined setups, clear rules, and you just execute exactly as planned. You say, these are my 5 setups, and I don't deviate. There's no room for ambiguity. There's no room for discretion at this point in time. The objective is just to calm things down and stop the death spiral. And you just execute, execute, execute. You don't chase, you don't adjust, you don't move your stop, you don't add any kind of parameters in that you might normally do. You don't trail a stop, you don't add to the trade, don't scale out, you don't try and second guess anything. Like I say, the objective here isn't to maximize returns or make the most as you can. It's just to have a clear rules and objective and to stick to it. So at the end of that 20 trade challenge, you go, I did it. I stuck to these rules. And yes, I would have loved to have moved my stop. I would have loved to have more size in this position. I'd have loved to do that, but I didn't. And that again builds your confidence back up. Don't mess around with dynamic position sizing or adding, as I say. Keep the same size, keep the same risk, and just forget about your P&L. Focus on the process, the process, the process. And this is a recalibration, a reboot, a reset. You don't care whether the trade wins. You don't care at the end of the 20 trades if you're up or down. You just care about sticking to the damn rules that you set, because this gives you a baseline, a foundation of discipline. Do you review, log each trade or each sequence if you're a hyperactive scalper, with the reasoning, all the other stuff, right? And if you break a rule, you start again. But what this does is you might be like, oh God, Mark, this sounds like a real burden. And it is. But like I said before, sometimes just sitting and bathing in the discomfort is what you need as a trader, because it's not comfortable. It is tricky. It is hard. And so saying to yourself, you know what? My training sucks, man. I've not been doing very well the last month. I need to do something about it. I can't just keep punting away, hoping things will change. I need to just steady the ship, small size, get down the 2020 trade challenge. And by the way, you make up something that suits you, 5 trade challenge, 5 day, whatever, but just something that you can lean back on and just go, okay, it's time to just reset and reflect. And you've got something that you can always use forever then. It's always this thing where you just recenters yourself, refocuses yourself, and proves you can stick to the rules, right? You say, my objective is just to do this. And you know what? You probably mess up. You probably break a rule. You probably have to restart. And you might be like, oh, I'm not doing this stupid thing. But you kind of need to do it to prove you can stick to rules and just to stop the damage. And I can't tell you how powerful something like this is. I've seen traders use this or something similar to this, come up with their own way, a reset they fall back on, and they can just pull it out. Comfort blanket, right? Things aren't going so well, right? Let me do the reset. Just steady the things down. All I got to focus on now is execution. I don't care about my equity curve. It takes a weight off your shoulders. It lifts a burden. And you go, you know what? Today, all I got to do is just do this. I got to wait for that to close above the high. At this sort of time, pull the trigger as my stop, or whatever you do. It's such an easy thing to do, and you're trying to get sucked in. But the point is, you're trying to hardwire these good habits. So well worth considering, well worth doing some more on. Okay, what else have I got for you guys? Oh, this is the biggie, the confidence bank. Try and imagine in your mind, okay? Imagine for me now, you've got this bank, okay? It can be a little pig like that. It can be, I don't care what it is, but you've got this confidence bank. And every time you do something as part of the process and the rules, you are putting a coin in, putting a pound coin in, £2 coin in, sticking a fiver in, you just deposits, right? Every time you break a rule, you override risk rules, you revenge trade, you do anything outside of your remit, it's taking money out. It's taking money out. It's taking money out. And at some point, empty. There's nothing in there. And that's when the spiral occurs, the frustration, the anger, the despair, things aren't going my way. I can't do this. I can't. We've all been there. And it happens, right? We're human beings. You're going to do stuff that erodes confidence from time to time. It would be brilliant if we had confidence up here all the time, but we don't, right? We're human beings. We're traders. It does ebb and flow. Now, over time, I grant you, it's more, there's more stability there because you can draw on previous years, previous decades and go, I've got it. I just aren't, at the moment, things are a bit rocky. So I appreciate that. And I understand that when you're developing, there was a time there which you kind of maybe don't have any previous history or track record to draw on for confidence. But if you can make these deposits and focus on building that piggy bank up and saying, hey, do you know what? I stuck to my trading rules today. I didn't break my risk rules. I didn't chase that trade. Jung, another quid, another pound, jung. So that when you do struggle and you do wobble a bit and you have to kind of reset, you've still got the confidence, you've still got something in the bank. And if you can constantly think about making those deposits, it will pay off loads. It will pay off just by having a clarity, calmness to your process. Having confidence is the point of this webinar, right? But it's, if you can have it elevated and you can attach your confidence, as we said at the beginning, to your process and your discipline and the way you stick to trades and you don't break the rules, then over time that translates to your P&L, and then that boosts your confidence. And we have that snowball that's working in your favor rather than against you when you're eroding your confidence, when you're taking those over trades, your revenge trading, all the stuff we know what we do as traders. And it just becomes that spiral where it just gets out of control, frustration. Before you know it, you're looking at your equity curve, account balance going, that is an absolute mess. I don't know how I'm going to get out of it. And you start doing all sorts of stuff like swinging for the fences, switching strategies, grass is green on the other side type stuff. So, You know the score. You've been trading for a while. You know how this works. But a good way is have that visualization. I'm just making a deposit. I want to build that into a substantial balance so that when I inevitably have to make some withdrawals, when I'm a human being and I do cock up, I do make a mistake, I do jump the gun, I do some slip up, it doesn't erode the confidence so much that the bank is depleted. It's okay. You can deal with it. You know what? I messed up today. I did this, I did that. Fine. It's not a big deal. My confidence is still high. Okay, so something to consider, a few things here for you. Having a 3-minute daily discipline check. And I'm leaving this open for you to decide how to do it. But you kind of want to have something where you are building that discipline daily. And I understand that it's not easy to go out from being someone who maybe breaks rules, maybe is a little bit haphazard, shooting from the hip, to being iron discipline straight away. It's not going to happen. You have to do it slowly. And same with confidence. You can't just click your fingers and go, oh, I'm super confident. All that stuff about looking in the mirror and say, yeah, I'm a great trader. But if your equity curve isn't that, you don't believe it. You can't kid yourself. Your subconscious knows. And so you have to build it slowly. So build something that's easy to do, 3 minutes. It's something you ask yourself before and after each session. It compounds over weeks and months. You make it a game. You build a streak of good discipline. Okay, I'm going to stick to my risk rules today. I'm going to do this. I'm going to do that. At the end of the day, did I stick to my risk rules? Did I check? And listen, there's something to do. Don't try and bite off more than you can chew. Going back to the first point, focus on the one thing that's going to impact your trading the most. Is that overtrading? Maybe you do a load of these things. Maybe you overtrade. Maybe you FOMO. Maybe you do. Pick the one that's the most damaging. By the way, if it's breaking your risk rules, it's that. If you're over leveraged, if you're swinging over your daily loss limit, if you're taking more risk per trade than you should, it's that. Don't even think about looking at anything else. You must dial that in, because without a solid foundation of trusting your ability to be a steward of capital, trusting your ability to be a good risk manager, without that, it doesn't matter. Nothing else matters. So if it's that for you, focus on that. Say, hey, listen, man, I need to be a good risk manager first. All this stuff is irrelevant. I could be the best trader in the world, but if now and then I go on tilt and I blow up, it's pointless, absolutely pointless. So that will be your priority if you're that trader. If you're not, you pick the one that's right for you. Make it a game, build a streak of good discipline. I know many of you have got this, but I have a discipline tracker that I had coded up. It's a Google Sheet, a free download. You can get it from tradersmastermind.com. Many traders have found that this is very useful. You don't need this, it's free. You're very welcome to have it, but you need to track how you're improving. Even if you use a sheet of paper and you say, right, I'm going to make sure that I check the headline risk. I'm going to make sure that I don't trade in the first 15 minutes of the open. I'm going to make sure that I do my due diligence on the chart. I draw my key levels in, whatever it is for you. And you just say, right, I'm going to try and do this for a month. Okay, I missed a few days. Okay, next month I'm going to get better. Next month I'm going to make a game out of it. Like I say, use a piece of paper if you like, but you're very welcome to, make a copy of this. You can, once you put your email in, you can just press a button and you can make a copy of it in your own Google Sheets and add your own stuff to it. But the point is that you create a process for you to improve your discipline, because improving your discipline improves your confidence. And we had that cycle that we talked about at the beginning. And honestly, when that gets going in your favor, it feels good. Trading feels more relaxing. You're not so pressured. You're not so stressed about the outcome of individual trade. You accept the risk. It's easier to size up. It's easier to see the plays. It's easier to watch and observe stuff. It just becomes a completely different animal. And so, anything from this, just make a pact with yourself that I'm going to work on the biggest challenge I've got relentlessly over the next couple of weeks. Relentlessly. I'm not going to focus on anything else, but trying to improve that. And some objections you may well have is, and we've all had these guys, and I kind of toyed about putting them in. Should I put them in or not? These self-explanatory. I thought, you know what? It needs to be said. Often we say, if you're struggling with discipline and confidence and your capital's eroded and your equity curve is down from highs and you're not feeling good about it, there's always that little voice. If you're honest, there's always that little voice that says, I need just a big day, big trade. I don't need to say it. Deadly. Because if you get it right, you're reinforcing bad habits. If you get it wrong, the damage is even more. I've seen so many traders do this, and it's sad to see. Like, hey, just steady the ship. You go back to basics, do your 20 trades, get your discipline tracker, decide what you're going to focus on, the three big things, try and improve on that. You don't need to swing for the fences and hope. It's such a bad way to do it. Imagine if you're a fund manager and you were a custodian of 10, 20 million assets under management and you were down 2, 3, 4% on the month. You're like, oh, we should be back to highs. People are trusting you with capital aren't expecting you to have a punt. They're expecting you to stick to the process and recover over time. So there's that. The other thing is, many traders I think know what to do but don't do it. And this is a big, big topic. But why I mention this today is you can quickly identify the biggest levers you need to pull. That's part of the game with trading is what's the one thing I need to focus on right now that's going to give me the biggest bang for my buck, my biggest bang for the resource I'm going to put it in. Discipline, okay, fine, but what aspect of discipline? Is it you're chasing trades? Is it you're over trading? Is it you're getting caught in chop? Whatever it is, and then solve forex because you know what you should be doing. We all have this time in our life, or we like a trading career, should I say, where you know what you should be doing, but you just can't seem to put the rubber to the road. And so solve rather than sitting there trading. Go, how can I solve this problem? No distractions. I know this, but this is just not really connecting. What do I need? Okay, I need to track this. I need to have a kind of fallback. I need whatever you get and whatever is valuable to you, so I can bridge that gap between the knowledge I've got, the experience I've got, and actually the results I'm getting. And the final thing is I don't have time for reviews. Listen, you can make time. You can make time. And I always think this. If someone says they don't have time, that's not true. Everyone's got the same amount of time a day. It's not a priority for you, and it should be. I'm not here to lecture you. Of course not. That's not my objective at all. I'm here to help you suggest things that will help you improve. And I suggest that you can allocate 5 minutes a day. You can make sure that you can allocate that 5 minutes to do the review. Other things in life are important to you, and if this is important, you'll make time. And sometimes it's just saying, hey, my priority need to be, I don't need to spend hours on this. I can review in 5, 6, 7, 10 minutes. Can I spare 10 minutes? Yeah, maybe not straight after trading day, maybe after whatever it is. But the ROI from that is massive because honestly, when you start to see some things written down or in your spreadsheet, whatever it is, I'm not saying you have to do massive journaling. No, great if you can and you have time to, but just going through that process of did I stick to my plan? What went well? What didn't? What could be improved? Just those questions, time and time and time again. And you start to see patterns. You go, look, I've written this down multiple times that I'm chasing a little bit too much. So what solve again? The entrepreneur and you has to solve for X. I'm seeing that I'm chasing quite a bit. What do I do? Do I wait another minute before I pull the trigger? Do I wait for a 15 tick pullback? There are very many ways to solve that problem, but then it's up to you as a trader to say, hey, how can I solve and get the outcome that I really want? But you don't know that that's a problem until you start reviewing and doing all those bits. Okay, so summary for you guys. Remember, we have a Q&A in a moment. If you've got questions, please feel free to stick them in. I'll do my very best to help you if I can. So summary, remember those big 7 and how to avoid. You don't need to know the whole 7, but just know the ones that resonate with you. You will have hopefully watched those and gone, and number 3, man, that's bloody overtrading, or the one that's right for you, and that's the one that you focus on. Make those deposits into your confidence bank. It's honestly, it's just a superpower. Being confident, and I understand it's a bit chicken and egg. You don't have the confidence because you don't have the results, and so it's very, very difficult to do that. But you then find your confidence from the process. Make those deposits every day. I stuck to my process. I stuck to my risk rules. I didn't do this. I did that. All the things that are important to you. Don't overburden yourself, but just chink another deposit. Chink another deposit. Know your own nemesis. We're all very, very different. One man might be struggling with overtrading. One woman might be struggling with hesitating to pull the trigger. Different personalities, different things. It's not a one size fits all solution to this. It's recognizing the biggest domino for you and focusing on that and coming up with solutions and tactics and ways to improve that. But stuff like the discipline tracker or a notepad, stuff like trying to improve, stuff like asking yourself 3 questions before the trading day. These little things are valuable. It just have to adjust it to suit you and say, hey, the questions for me need to be this. The thing that's important to me is this. Developing self-awareness during the trading day. Oh, if this is a big one, if you can be super, super, super mindful of what you're thinking and your thoughts and how you're perceiving the trade, how you're perceiving price. Are you frustrated because you missed something? Are you angry? If I muted that, apologies. Are you angry? Are you this? Are you that? That's so, so important. And so being self-aware enough to go, you know what? I'm feeling a little bit frustrated. And so I need to step back and being self-aware enough for that. Um, Building recovery systems to regain confidence. That 20 trades is just an idea. You choose yours. It's really, really valuable having that safety net to fall back on and go, this week's not about P&L maximization. This week's about recovery. Is my recovery system is implemented? Yes, I'm activated. All I'm worried about is following this process. All I'm worried about is doing this. I'm not worried about doing smashing out the park. I just need to steady the ship, calm myself down, build myself back up. Okay, so next week, ladies and gents, we're going to go a little bit more tactical and kind of swing sideways a little bit, talk about specifically the cycle of overtrading and impulsive decisions. So I'm going to have come some really decent ways to approach that for you, some drills you can use, some approaches you can take, and how if it's something you're struggling with overtrading, and I have my hands up, this was something I struggled with for many, 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 many years. Um, how to crack it, because once you crack it, you just feel like you're in control of stuff. And that's a nice place to be with a trade. It doesn't guarantee anything, of course, but it's a good place to be. So that'll be same time next week. If you want to register for that, you're very, very welcome. If you have any questions, guys, I am happy to take them. If not, I'll assume that you've got exactly what you needed. You've got away and you're going to become super, super disciplined, and it's going to help you move forward in your trading, because that's my objective, guys. That's why we're here. Partnership with Pepperstone, myself, Traders Mastermind. Pepperstone want you guys to you trade as well as you possibly can, stay disciplined, stay in the game. We would, and I want that for you as well. I want you to be able to, if you've got the potential and you've got the knowledge, I want you be able to not look back and go, it's just one thing was holding me back on that one damn thing, and I never cracked that nut. You go with it full force, and be amazing what it can do. Okay, question here from John King. John says, I love your content, Mark. Thank you, John. I do appreciate that. I've been watching you for years now. Appreciate that too. Do you have any ideas for someone who has a problem when starting the day with a loss or losses? This calls up to keep trading until we blow up our accounts. Yeah. John, funnily enough, I have a podcast as well, and maybe you listen to it. And that's the topic of this week is going to be that. But let me tell you what I wanted to cover with that now, so you can listen, for the full kind of 8 minutes or so. But let me share with you that early loss is a killer. You know it. That's why you mentioned it. It stings, right? Um, as with a lot of things in trading, it's coming up with a process to deal with that. And so the defensive answer is to say trade light, don't trade in the first 15 minutes, don't do this stuff. That's the defensive answer. And that's probably the correct answer for many traders. However, it's not the right answer for a lot of traders, because that's where their edge lies. And it's not necessarily the edge isn't present in that first opening 15 minutes, hour, whatever it might be. It's that the emotional damage of being down so early in the day has a knock on effect the rest of the day. So here's something to do, is to have a process where you say to yourself, hey, do you know what? I know that I trade poorly after a losing trade, the first losing trade. I've got a daily loss limit. I've not hit that. However, I need to have a reset. Because very often at the open, it's easy to be out of tune by a couple of ticks, a couple of candles, and you messes up, right? So it's just saying to yourself, hang on a second, if I'm my first trade as a losing trade, I need to reset. I need to walk away. I need to forget about it. I need to chunk up the day into three. I've got the open, midday, evening session, or whatever it might be, and I need to put it behind me. I can't overthink it, because, if you overthink it, it's going to impact you. If you aren't able to reset after that early loser, John, and you haven't got a process that works for you, you have to just reduce the size and just calm it down. And also look at the data, right? If you go back, you might be deceiving yourself a bit and thinking, hey, you know what? I'm not actually that good at the open. I think I am, but the data shows different. And if you've got that in front of you, you go, the easy fix is I don't trade the first 15 minutes. I don't trade on Monday mornings or whatever it might be. There might be an easy solution there. Um, but it's just having that reset and reframing process that doesn't allow that feeling of, because I know what it's like, right? You're all fired up, going into the day, click, loss. You're like, oh God, oh God. And you don't want that. If you do have it, fine, you're a human being, develop a process for um resetting that emotion if possible. Thank you, Mikhail. He says that was brilliant. Appreciate that. The idea of confidence deposit is amazing. Yeah, honestly, pal, if you can do that, and you can think about those deposits, it would so help you trading. Winthorpe, yeah, just says trading places. Good stuff, Mark. Looking forward to number 3 in the series. I mean, hesitating to pull the trigger. We'll get you sorted with that, Lou. Um, Etan says, where can we see the presentation? You just saw it. E-recording should be sent to you 24 hours after this. I guess the guys will send it out to you. Um, a Barati says, thank you, very helpful. Thank you, sir. Appreciate that. Nina says, thank you. Appreciate that, Nina. Jason says, great first webinar. New Jason, welcome on board, pal. Thanks for this. Can't wait for the next one. Well, I'm glad it's helped you. And that's the objective, Jason. Appreciate the feedback, pal. Lee, more deposits, less withdrawals. There you go. The nutshell. Lee has summarized it for us all. More deposits, less withdrawals. You can think that next week. That's going to help loads. Appreciate that, Lee. Good, succinct recap. And Max says, thank you very much. Okay, let me double check I've got everybody. Oh, it's Q&As. Let me see. Sorry, guys, I missed it. Anonymous says, appreciated. Beth says, hi, Mark. Thank you so much for the useful practical webinar. Appreciate it, Beth. Very welcome. Pete Smith says, how to register for the next webinar. I think if you're registered for this, you were in this series for this month, you may have to register for the next month, the next topic we've got coming up, which I'll reveal in the next week or so. But I think you are registered now for the next 3 in this theme. But Pepperstone will send you a reminder and stuff, and I'm sure it'll be easy to do if you're not. But I think that's how it works anyway. Pepperstone is sorting all the logistics from a technical perspective. Gary says, thanks very much. Great session. All right, guys, we'll call it an evening there. It's 7 o'clock my time. Thank you so much for your attention. I hope you found this valuable. We're back next week to really dig into discipline, to really sort this over trading out, and get you a better trader, right? That's my objective. If you work on it, take some of the things that you find valuable, could be a real turning point for you. All right. Appreciate it, guys. Take care. Bye-bye.